Most private investing structures are hierarchical. One general manager, many limited partners, top down control. But what happens if investing becomes collaborative instead of hierarchical? And what role does AI play in making that operationally possible? Today, we're talking about putting private markets on chain and why AI may be the coordinating layer that makes collaborating investing possible. I'm Colin McKee, founder of Endeavors AI, where we explore how AI transforms real operating systems, not just tools. Today, I'm joined by Joseph Argio, founder of Iron Key and CEO of Fish Network. Joseph, welcome.
Thanks for having me on. I'm super excited to explain to everyone what the Fish Network's all about.
Awesome. So let's just start there. In simple terms, what is Fish Network?
Fish Network is a collaborative investing platform that enables investors to form thesis-driven communities to swim with the sharks. What do I mean by that? Well, it enables non-accredited investors to pool their capital together, much like a fish school, which is all these individual fish that are pooling their knowledge, resources, and capital together to invest like a formidable creature like a shark, right? Typically, retail investors have been locked out of this market, venture capital, alternatives, private equity, and the Fish Network changes that.
So it's an amazing novel concept, but it's not super complex to understand. I think you broke it down wonderfully. So why hasn't the model worked well before?
There's been a lack of regulatory clarity around pooling capital together for social and investment use cases. In the eyes of the SEC, these pools of capital, if you have general partners and limited partners, typically these limited partners are entering into an investment contract. And that means that they're expecting to profit off of the work of others. And this forms the basis of how fund managers can get paid legally. And what the Fish Network does is removes that whole traditional GPLP structure and flattens it into a member managed structure where investors pool money based on a certain idea or thesis, and then they collaboratively deploy that capital into as many deals as they want over a certain period of time. And this is what opens up the market to early stage investing by enabling lower cost participation, lower friction, as well as diversification for the little fish and the little guy, and enabling them to get sophisticated, diversified exposure to private markets in ways that they just haven't had exposure to in the past.
Excellent. So for those that don't know, and I would imagine my viewership mainly does, but let's assume that they don't, can you walk us through the traditional structure first, the GP and LP?
Sure. So in a traditional structure, there's typically a fund manager on paper, typically the general partner. Person makes decisions on behalf of all the investors. They are quite literally a fiduciary. They're legally responsible over other people's money, and they get paid to do that in the form of management fees and then 20% carried interest, which is a performance fee if things go well. And then on the limited partner side, they're providing that capital and they're trading their money for time because they don't want to be involved. They want someone else to figure out how to invest that money. And that's the traditional structure. And that structure has been engineered over the last 40, 60 years to satisfy the needs of the general partner.
Right.
The general partners are typically, I don't want to say taking advantage of, but the general partners are making money at the expense of the limited partner. And it's not just the economics. So limited partners are typically stripped of investor voting rights, information rights, all the things that really make them a real investor. For example, when you deploy money as an LP into an SPV or a syndicate, which is a deal by deal investment, you're typically do not have voting rights and you don't have information rights, meaning the fund manager of the SPV or the GP can do what they want. And you're kind of on the hook for whatever they decide to do. You're trusting them. And that's just the way private markets investing is done in the US. Now, what we invented at Fish Network is capital pooling infrastructure to enable anyone to pool capital and then deploy it into any asset class that they want. It could be pooled you could have investors to pool money to buy a business. You could have investors pool money to invest in startups. That's venture capital. The possibilities are endless, but what we're building is essentially infrastructure for micro portfolios to exist on chain in a way that's regulatory compliant. So in our model, investors are not passive. They're not limited partners. They're not trading money for time. In fact, they want to be involved and they want to learn. That is the American way. And it really just enables, it levels the playing field in private markets and gives retail sophisticated tools they otherwise would not have. Most of the way the asset class has worked is that the fund managers don't necessarily want to be transparent. They have a monopoly on the space, and smaller investors aren't sophisticated enough to really participate in any meaningful way. And that's why we built Fish Network, is to open up the bottom end of the market.
Great. So, and when you say built this, it's not brick and mortar. You built it. It's an AI based platform that you've created, correct?
No, actually, it's investment infrastructure that's blockchain enabled. And there's been community driven investing experiments in the past, and there have been AI capital deploying experiments that have been done actually more recently. But what actually makes this possible today is the AI enablement layer, because humans are unreliable and they just make mistakes. And what AI makes it easy for all these groups to to coordinate and work together. And that's was really the missing piece that we've seen this people try to do this before. We've seen it in 2021, 2017, and it's never worked because most people have tried to do it in a more a gunslinger way offshore, where you don't really know if it's a security and it's not regulatory compliant. But what makes Network unique is that we have a compliant structure to actually do this in the US, where people pull money and there's no carried interest, there's no GPLP structure, it's all transparent, there's much lower fees, everyone splits the expenses based on who's putting in money. So it's quite literally democratic and really will help unlock the next layer of emerging managers and private markets investors in the US.
Cool. So thanks for, the quick correction. We're saying kind of similar things in different ways, but you could say the foundation is blockchain, but it only works, in your words, due to AI. So what does AI actually perform in the Fish network? What is its specific tasks? Does it coordinate the voting, the deal flow, updates, automation? What is AI doing that makes it actually possible now where it wasn't in the past?
Yep. There's a couple key use cases. One is voting, makes it easier for people to interface with the voting structure, and even has voice confirmed voting. So if they need your consent, they just give you a phone call. You get a phone call from an AI agent. Is one of the ways we make we make Fish Network easy for investors, because, and the other side is the AI document review side. So we have an AI agent that reviews documents on behalf of the Fish and the Fish school organizers, which are the emerging managers. And the third is diligence. So there's a saying in software where many eyes makes all bugs shallow. The same thing applies to investment diligence. So if you have more eyeballs doing diligence, there's a better chance you're going to find that needle in the haystack. Or another more cynical way of saying it is what the founder's trying to hide from you. Is pretty easy to find if there's a lot of people looking at it that have the right subject matter expertise. So we have fish schools that are domain specific. We have nerds who love robotics and they all invest in robotics startups, and they know exactly what the founder's trying to hide from them in a robotics deal. And that's the way we think about Fish Network. And that's in terms of like micro communities on chain. And in the same way that Shark Tank is a social kind of investing show, we're building Shark Tank for everyone with real money and with real emerging managers. And that's really what the game changer is.
Cool. So you also mentioned that you're using a hybrid approach when it comes to AI tools, some white label tools, some things that you're building custom. Why the mix? Is it just availability, or what what led you to take that approach?
Yeah, some of the more bells and whistles on the platform that make it really fun and easy to use is the AI enablement features. But we didn't necessarily think that we had any sort of competitive advantage in those areas, which is why we decided, for really speed to market, to just use some of the best in class tools in thesis generation, and I mentioned document reviewing, analysis, and some of the more best in class solutions to provide everything at the person's fingertips, so they can really just have a one stop shop for all their investing needs. And those are some of the AI features that we've enabled.
Great. So, quick break, talk to the audience. If you're building a fintech, private market, or investment infrastructure and thinking about how AI reduces coordination friction, subscribe to the channel. Drop a comment with the system that you'd like us to break down, and we'd love to hear about it. So, Joseph, you're early. You've got first paying customers. You're building use cases, case studies. What's actually hard right now?
That's a good question. What's hard is getting investors to change their behavior. Now, it's hard to get consumers to change their behavior in general. But with investing, it's even more difficult because when you're dealing with investing, investors are evaluating risk. And there's all types of risk. There's market risk, investment risk. And as an investor, you're trying to quantify all of these risks. And when you're trying to introduce a new investor behavior that doesn't exist, um, and I'll just double click on what that is. There's two sides of the spectrum in investing. There's direct investing, which is like angel investing or doing it yourself, and there are pros and cons to doing that, right? Well, for example, one of the cons is that you have to do all of your own diligence, and that's time spent, right? Who has time to spend 30, 50, 100 hours to figure out if everything is as they say it is, right? And then on the other side of the spectrum, you have blind pool funds, which is more the GPLP structure that I mentioned. You're really trusting a traditional fund manager to make decisions, and you're paying a good chunk in fees for them to do that, right? What Fish Network is enabling that middle ground where you can invest with other people, split the risks, split the upside, all transparent, and it's a level playing field. No one gets special treatment. There is no GPLP structure, and with that comes challenges, right? Because, like I said, now investors have to evaluate another type of risk on top of the risk of losing all their money, the investment risk, because we're introducing a new operational risk with how the money is deployed, right? And an operational risk that doesn't exist if you just everyone does it that way. We'll just do it the way everyone else does it, right? Which is what most people think. It's kind of like the herd mentality, right? Just do what's you don't want to introduce. You don't want to overcomplicate things, and that's been the challenge. Is trying to get investors comfortable with that because it's an uphill battle for really just adding that extra layer of risk. So there's a lot of education and handholding and getting people comfortable with the legal implications too is part of the challenge. But just like any other innovative product, it takes time for the market to understand it, especially if you're trying to create a new category,
Hmm.
right? If you're just making it a little bit faster, a little bit cheaper, well then like it's a different game. But if you're truly building something innovative, it takes both patience and resilience, and those are the challenges that I'm facing.
I'd imagine. Yeah, that's what I was thinking. The education layer of that is just teaching people what it is that you're doing, and then again, trust. But yeah, all good points. So when you're putting private markets on chain and layering AI on top of that, what are the governance risks?
There's plenty of governance risks, but what we do is we automate the creation of the community so that everyone can see it on chain and no one can change it. So the governance risk really becomes the stakeholders are unable to work together well. These are human issues. What the platform does is make governance super easy so that everyone has a say and everyone gets a vote. So everyone has some decision control over where the money goes. But really, what you're leveraging is the wisdom of the crowd here. And so you're betting on the fact that other smart people who know about robotics, for example, know enough to kind of help you avoid those landmines and also help in aggregate make better decisions and help share the cost and the risk of diligence. So these are just some of the different nuances that go along with kind of creating the new investor behavior.
Yep. This could be repetitive, but I wanted to bring up the fact that you liken this something similar to a Robinhood, lowering friction and increasing availability or reach to public markets or private public markets. What's the upside of that shift, and what are the risks? So you said you enabled anyone to be an investor.
Well, I can think of some very obvious risks. So the risk is that unsophisticated investor, their eyes get bigger than their stomach. And what I mean by that is they get a little bit ahead of their skis, right? Typically, this is not available to retail investors. Crowdfunding has its own comes with its own set of issues and problems and cumbersome operational burdens. And what we're enabling is people to come in who have expertise, and that's what qualifies them to be able to deploy capital into these deals, not necessarily what their accredited investor status is or anything like that. So there's some obvious risks there of people getting involved in things that they don't necessarily understand, especially when the whole purpose of this is to really make it gamified and social investing in something that's compliant and traditionally palatable rather than just gambling on meme coins and crypto. This is trying to bring that back to mainstream in a very real and safe way. And that obviously that comes with a whole other host of legal challenges that we've had to work through over the last 6 months. But that in itself is the opportunity because it's a pain in the ass and no one has figured this out how to do it. So it took a bunch of time and energy, but now that we know how to do it, it becomes turnkey and we can basically productize something that's in the past has been a service because you need people in Excel, you need people overseas in Excel, moving numbers around in the spreadsheet. No more. It's kind of all the full fund automation and accounting and entity creation is all handled on all digital and transparent. So this is what really I think could unlock the next generation of educated and active investors. And it's almost like the fish swimming upstream because rather than just the herd mentality, because this is how people who have a vested understanding and interest, how they can their better their financial future rather than just kind of trusting what other people are saying without validating. And I guess the alternative is kind of the more, retail pump and dump schemes you've seen, the GameStop stuff, the Wall Street bets and the gambling on meme coins. And what we're trying to do is enable that, but in a real and safe and compliant way.
Yeah,
And then obviously there are drawbacks and challenges to deal with on that journey. But on the other side of that journey, things look a lot brighter.
right. Yeah, a more mature and educated way for sure than just, clicking on your cell phone because you read a tweet or an X or whatever they call it at this point. Awesome. So as AI reduces coordination friction, what do you think happens to the small emerging managers over, say, the next 5 to 10 years?
Well, what we've seen the last year or two that what AI is doing is that it's absolutely destroying the venture capital industry. So it's becoming entirely fragmented. The middle of the market has evaporated because these funds now realize they can run a lot leaner. They actually don't need analysts. They can just run an agent, right? And so these middle market funds are trimming talent. So what are those laid off people going to do? Well, they're either going to try and get a job at A16Z and fill in the blank. There's top five of them. Top five Sequoia, fill in the blank. They either go to the mega $1 billion VC funds because those are raised somewhere between some insane amount of money in the last year in the neighborhood of $16 billion. So you either go that way or you go the emerging manager route. Everyone's going to launch their own fund. We're entering the era of the micro fund and what we call is neo funds. So neobanks have been hugely successful over the last 10 years because they're just building a better user experience on top of an existing regulatory structure, which is the US banking structure. And those companies have done super well. Now, what we're building for is the next generation of neo funds on the buy side. So this is what I'm talking about is neo fund infrastructure where the compliance is built into the smart contract. So the agreement itself has rules that everyone must follow once they put money in. So you can see how that can lower the compliance overhead, simplify the accounting, and keep everyone honest. And it makes it make sense and viable, and it makes the economics make sense for these micro funds to exist as super lightweight vehicles. Where in the past it just didn't make sense because you had to hire a lawyer, and then you have to get an accountant, and then you have to pay DocuSign $30 a month, and it just doesn't make sense. You just need it's a turnkey solution, and that's what Fish Network is for emerging managers.
Yep. Would you agree? It blurs the line between retail and institutional. You don't just have two different things to choose from nowadays. You've got a good bit of range in between those. Fish networks being one.
Yep. Yeah, exactly. That's where we start today, and we have plans to go up market and service more business like customers to enable, but really that just accelerates the mission to put Fish Network in the hands of every investment club, every investment community, where anyone can be the emerging manager. Kind of a situation where the software guardrails just make the cream rise to the top. It's a meritocracy. All the best investors are shown on the platform, and that attracts more money to the platform. So it really just democratizes and then provides a transparency and accountability layer for investors, so that, and simplifying it so that the investors don't have to do their own comprehensive diligence, because the Fish Network infrastructure keeps everyone honest.
Okay. One guiding principle.
Own the workflow end to end. Workflows are patentable. The workflow that you understand better than anyone else is your competitive advantage, and then AI can just make it better. So typically, I would say own the workflow end to end.
I love it. Joseph Argio, founder of Iron Key and CEO of Fish Networks. Thank you for breaking this down.
Thanks for having me, Colin.
And for anyone building collaborative financial systems and realizing that coordination, not capital, is the bottleneck, that's exactly the kind of AI workflow problem we explore here at Endeavor's AI.